Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren, how you doing?
Hey everybody.
I'm dressing a little cooler today, Lauren, because it's a bright summer day, one of the nicest stretches of weather we've had this year.
That's right.
So I'm celebrating by being able to proactively walk outside and enjoy the weather. So that's why I'm wearing a short sleeve shirt today. But I wanted to talk about one of the things that's going on currently, which is market volatility. As we all know, we've had some episodes on that. Today, as we tape this episode, there's a lot of market volatility going on.
That's right.
Looks like most of the stock market indexes might be going down somewhere around 5% in one day, which is a lot.
One day. Yeah.
And there's an interesting article that was written earlier this week in USA Today, and there was a survey done. For the American investors, and they're talking about the stress that was going on with the volatility in the market, along with just other general economic conditions, such as what was going on with this debt ceiling, date that they were talking about, and the current unemployment rate, how it keeps seems to be trickling up again. And they found that of the people surveyed, and this is back in the middle of June before the volatility really hit.
Right.
So imagine what they're feeling now.
Right.
But 51% of the people polled of Americans, middle class, were somewhat stressed.
It's really high.
That's high. And then 27% were very or extremely stressed about economic conditions.
Yeah.
That's a high number too. And they're saying that the stress is this, especially the people that were very stressed or extremely stressed. Some of the things that were coming from this from the stress were increased fatigue, insomnia, increased muscle tension, elevated blood pressure, and in some cases even worse. There's been some statistics that are showing an increase in suicide rates, which is scary. So one of the things that they said that you could do to reduce this emotional stress is to take proactive steps. And one of the proactive steps is to work with your financial planner to make sure your allocation is meeting where it should be, and to proactively rebalance. And I thought that would be something that we could talk about for the last couple minutes as a proactive step. The good news is for our clients that invest with us, we're already proactively doing this for you, so you don't have to worry about this. But I think it'd be good for people that aren't working with this, or for people that are working with us, what it means to rebalance, which is one thing that we can control.
Yeah. So, for instance, if you've worked with your financial planner and you've decided how much money you should be invested in the stock market and how much money should be invested in very low-risk bonds, what happens when you rebalance is that, as you've seen a lot of recently, the stock market goes up and down, and so then the percentages in your portfolio get out of whack from where you originally wanted them to be. So when you rebalance, you're bringing those percentages back to their, that's why it's called rebalancing. You're bringing them back to the original balance that you had. And then as a side effect of it, you're doing the opposite of what panicked investors are doing, which is you're forcing yourself to buy things when they're lower, and then you're forcing yourself to sell things when they're higher, which is the exact opposite of the emotional reaction of a lot of investors, especially right now. It looks like August, we will break the record again for the amount of money being taken out of mutual funds.
And what are they buying?
Well, in many cases, the first thing is they're not even buying anything.
Putting it in their backyard.
A lot, and unfortunately, one of the things that's just really hard about economic conditions is that we're also at the breaking a record for the number of people taking out loans from their 401k plans. I mean, in a lot of cases, people are just spending the money; they're not buying anything. But to the extent that they are buying stuff, they're doing the exact opposite of what they should be doing. They're selling their stocks, which are low, and they're buying bonds, which the price is very high right now, and the future yield is very, very low, or they're just spending the money.
So they're doing the opposite, which is probably going to cause further stress if as we expect.
That's exactly what's going to happen.
Okay. Well, okay, good. So that's good. So if you would like some assistance on how to rebalance, if you're not currently working with us, either Lauren and I would be happy to help you on that. We also have a previous episode on Erickson TV in our archives that talks a lot more about rebalancing. I highly recommend people look at that. Thank you again for watching this episode. We'll see you soon. Bye now.
See you next time.